what's fundamentally changing in banking is the regulatory landscape, right? Basel II, Basel III, Basel N. I mean, now the numbers really don't matter. But there's a lot that's happening in the space of regulation. Now, this regulation globally, let's say, is Basel III, where you're looking at liquidity risk, you're looking at capital, and so on and so forth. So there are purpose-built applications which address these spaces. Now, in India, for example, the most important addition, if you will, is financial inclusion. So when you're looking at financial inclusion, then you're looking at how does the technology enable that process in a cost-effective manner. So essentially, if you really look, we're looking at the entire stack, all the way from hardware to middleware to database to software to applications, to support all of these changes that are happening or the innovations that are happening within the financial services. From a banking knowledge perspective, I think Indian bankers are far superior because of the way they are trained and ingrained into the system. Challenge, however, is on the technology side, because there are multiple legacy systems at multiple levels of evolution, if you will. So what happens is marrying all of these together and getting value is really the big technology challenge. So as a response, if you see what's happening in Indian banking is there is a relook at three fundamental areas, and this is what the governor also was talking about. One is the whole approach to risk management. The second is the customer experience. And the third is the whole data management. And in fact, it's very interesting that the governor himself calls out quality of data as a very important aspect. So what we do see is that there is an initiative within the Indian banking system to relook at their data assets. That's, to my mind, a very fundamental need of, kind of managing the new wave that's coming our way. The second aspect is on the entire risk management. The regulator has given a time frame. They said by this year you do this, and so on and so forth. While it is not mandatory for everybody to move advanced approaches, all the banks would want to do it because you're in a market space, there is a peer group competition. So what I do see in Indian banks is the current challenge is of multiple systems with multiple vintage, for want of a better word, and trying to make a continuum of them. So what we see refreshingly is the shift in that of wanting to, make it more simple, more straightforward. It will take time, but we see that initiative we associated with it in big way. A foreign bank or a new private sector bank have started at a level of technology which from a time point is closer to today, as opposed to say a public sector or private sector. So there will be a catching up time. And also in their very design, there are some things which are mandated for public sector. Size is a big issue. So what I do see is everybody is very technology aware, and that's that start point, and there I think they're all equal. Whether they have systems at the same level, well, each one is in a different part of it and different on the continuum, but all of them are on that journey, I think. Just to recap, these banks, foreign banks and new private sector banks, started at a different time, at a different level of technology. So they do have that slight advantage, but I would think it's just a matter of time, because we now see public sector banks as active and as conscious of being up to date. It is only through technology that financial inclusion can happen. There are no two ways about it, because there is no way that a bank can open physical branches and man it fully in every one of these places. So it will, I don't know, I'm just thinking on my feet here now. Mobile is a good source. If you see the rural India or the unbanked India, almost everyone, or at least every household, has a mobile. So is there some way we can leverage that? Is there some way that, there could be what we used to call as a hub and spokes kind of a situation. There is a hub at a central place, spokes which cover. So this is really the space for innovation, and that entire innovation has to be backed by technology. No two ways about it. There's a lot happening quietly in the banking industry. Okay, so if you look at the priorities of a banking industry, regulatory priority is top, there is no question about it. But you also see that they can see that net interest margins is something they have to be conscious of. They have to see that their reputation is protected. I remember one of my CRO friends who, when I asked him what are your top 2 risks, he very strangely told me compliance risk and reputation risk. He didn't call out the standard ones, and I was completely taken aback. I was asking him, why is it? He says, these are the risks we haven't learned to regulate yet, right? So banks are conscious. Regulation, yes, that's a driver, no question. But I think increasingly they are all conscious of A, as a business need it is required, and B, more importantly, that's becoming a sine qua non. So how do you get a appropriate technology? I would like to use that word as opposed to latest technology. I mean, that's the decision that is being taken, and I see there are a lot of industry influencers that Indian banks bank on, the professors, the knowledge people who guide them. I was just listening to an experience of how a disaster recovery setup was, kind of put in place. Now, one is to do it because a regulator expects you to have it, but second is for you to really use it and find out how it works and so on and so forth. So I would believe regulation is a driver, but banks are mature enough today to look at it as a business need and a differentiator. So in a hardly it's a largely undifferentiated market. If they have to differentiate themselves, that's how they are adopting. When I joined banking, which I don't even want to remember when, way back, we were told retaining a customer is at least 5 times cheaper than getting a new customer. I don't think that has changed. What has changed is the loyalty factor of a customer to a bank has changed hugely. So convenience is what drives a customer. So basically the way I see is today customer centricity has become very, very critical once again. So it's like that whole cycle, right? There is customer, CRMs and all, and then slowly it comes down, risk management. And today I hear customer centricity in a big way. That's because retaining customers is becoming very, very important. And the only way you can do it is through technology. That's because you're trying to profile your customer. You're trying to find out what is the interest. And I think, and this is the joy I have of being in this industry, which is looking into future as opposed to looking into past. That's fundamentally what's changed, right? So the predictive analytics have become important. You're trying to predict the behavior and you're trying to do. So I would think customer retention is a core need of the industry, no question. And for doing that, how do you where does your analytics come in? Where does your predictive analytics happen? How do you profile a customer? How do you design a product? How do you reach out? All of that, technology is where the support will be. So if you look at Basel I, we spoke of credit risk. Then Basel 1.5 was market risk. Basel II brought credit risk in a furthermore detail and brought operational risk. Basel III has brought liquidity risk. So what they're doing is that actually each of them is trying to focus on an aspect of banking or financial services that would be important. So what this means from a bank, if I have to take away all of the buzzwords around it, all the jargons around it, what it means is you understand your capital at such granular level, which means your data has to be there to support it. Again, you come back to technology, you come back to data management, because the kind of quality of data and detail of data that is required is very different, because you're now trying to say this capital element, is it in this class? And for understanding whether it is in that class, you need further attributes of the data. So what's really happening at one stage, you are trying to get your data at the level of granularity. And once you have at that detail, you can mix and match it any way you want. So that's one big advantage. The second advantage is in Asia Pacific, the complacency that we are overcapitalized, and therefore Basel III really doesn't mean much. And there are at least 3 geographies in Asia Pacific which have said we'll do Basel III ahead of time. While in Western world, which is the reason why Basel III came, are still debating it, we've said we'll do it. That's because we already have good capital. We already have good liquidity in the system. So the difference, and that is where, and I am very happy about what it means to the banking industry, is that finally they'll have to get their data cleaned, consolidated, and at the level of detail that's going to hugely support business going forward, I would think. This industry is a very important industry for us, and both at a horizontal level and at a vertical level we kind of connect with the industry. So when you say a database, and most of the technology elements, if you see, are all applicable. What we have done, and we've invested hugely into this as Oracle, is we've built a domain layer on it. So we've built finance specific. So it's no longer just tools, we talk of solutions. And that comes from the fact that we relate to this industry. And there are those of us who actually come from this industry. So where Oracle is with Indian banks, Oracle is a partner, I would say. I mean, that's my easiest way or simplest way of summarizing what we do here. We are partners in all the efforts they're doing, be it on the core banking side, be it on the data management side, be it on the application side, be it on the risk management side, be it on simple, just the capability to build a warehouse or capability to do replication without troubling a production system, all of that. So across the various layers of our offering, we work with this industry. We learn from it and we share back with the